Okay, so let's talk EIC for Nokia's industry. So you should have gone to Nokia, and then their Finnish company, so FH Equity. Should have gone to RV. And from here, you probably would have gone to Markets Beta. And if we had used the Best Fit Algo, or you could have probably gone GIX Global. But basically, what would we say for the E? What are the two numbers that matter for analysis? Yeah.
The market cap, weighted average beta, raw beta, and then Nokia raw beta.
Yeah, 1.11 and 1.13. So what does that kind of hint to you? Even more so. They're more volatile than the markets. Okay? They're going to go up faster and down faster. Right? Which, if you kind of think about it implicitly, if they're selling essentially back-end equipment for cell phones, and think about the end users are probably in a down market, going to hold on to their cell phones a little longer, probably not buy as many cell phones. And so the carriers are probably in a down market, probably not going to spend as much on cell phone and cloud as they would in an up market. And so in a way, they're eventually going to be affected a little bit more. Okay, and so it's not surprising that you see them with a beta above 1. So this is an industry that is going to be economically sensitive, which also means in the middle of this global trade war and all this economic uncertainty, it's probably not good for companies like Nokia, because if people are like, hey, I got to see how this plays out before I make my big bets, then this is the type of investment that could be held up, given all the economic uncertainty right now. Okay. All right, next we're going to do the I. So we would go over to the custom tab, and now we're going to put in operating ROIC based on extra credit. And if you didn't do it for extra credit, you're eventually going to have to do this. So you're going to do it either way. But you're going to put in operating ROIC, and then you're going to do the WACC. And then we're going to talk about the spread. All right, so obviously this has a very positive spread, but there's a couple of potential problems with the data. And this is what I mean by you got to get past the clinical approach. So as you look at this screen, what could be one of the problems here in answering the question whether this is an attractive industry? There's two data problems that I foresee. What are the two data problems? Yeah.
ROIC didn't show up.
Yeah, we're missing the operating ROIC for a whole bunch of companies, right? And so that goes back to, if you actually do a Bloomberg definition on their version of ROIC, basically says if a company has a negative ROIC because of profit or capital, or if it has a negative an effective tax rate it can't calculate, then it basically doesn't give you an ROIC. So we're using Bloomberg to try and calculate the ROIC. Bloomberg is having trouble calculating it by default, and therefore we don't really have a good sense of what this industry really is. All right. Now here's an interesting part. We actually know Nokia's operating ROIC. What is it for 2018? I'll give you a hint. It's right here. So just because Bloomberg can't calculate it in real time using our custom formulas doesn't mean it doesn't exist, right? And if we actually calculated it, it would be negative 1%. All right, so we actually know what Nokia's negative ROIC is, right? But there's another problem. What's the other data problem we have here? So we got a bunch of missing fields. What's our other big problem? In the market cap weighted average, which we're using for the industry average. Hint, market cap weighted average. What's Apple's market cap? $929 billion. So the other problem when we do calculate a weighted average is we're basically looking at Apple, because everybody else is a gnat to Apple's elephant. So this is actually one of the other challenges of using the market cap weighted average. Is on the one hand, it de-emphasizes the smaller companies from destroying the mean. On the other hand, if one company is so big that the other companies don't matter, then you're not really looking at the industry. You're just looking at one company. Okay? And if you really want to look at this, it's basically Apple and Cisco are the industry. Nobody else is of significance in this industry. So if we don't calculate the operating ROIC, we can use traditional ROIC. So go here to Bloomberg. As of the latest year, just to be consistent with the operating ROIC definition, we can use that as a proxy. And I'll save this. My Nokia template. But here's the problem. Even if I use this definition, as I said, Apple is pretty much, for standard Bloomberg ROIC, pretty close to Apple's because Apple is the industry. So in this case, if I think about this, I'm trying to get network providers, and Apple's not really a network provider. So one of the things I could do is I come here to edit, and I could just kill Apple off this list. So that way, when I save this as my Nokia comp set, I could go back and look at my custom group. And I've created a custom group for Nokia. With Apple off of it, and I notice the ROIC is lower, okay, based on the average of the firms. I also see some distribution here. Like there's a couple of companies doing really well, a lot of companies doing pretty poorly, very few are near the middle.
Doesn't Cisco still carry that?
But again, Cisco is still a lot of the weight. So here's what's interesting. If I take out Cisco, and I looked at the more traditional players that are not Cisco, smaller players. Save this. It's a good point. Then when I go back and look at my list, custom still getting an attractive spread. Okay, so here's the thing. This is still today an attractive industry, and I'd have to explain that. And Nokia lacks competitive advantage, and I'd have to explain that. All right, but what's going to matter is also how is this going to change over the next 5 years? Is the industry going to get better or worse? So one of the things that you would have done is you should have gone to BICA. And as you read through the industry, you would have seen that this is about the emergence of 5G, edge computing, and cloud. That's what this business is increasingly about, right? And the real challenge for Nokia is 5G, okay? So let me just ask you, you guys seeing 5G phones? Anybody here have a 5G phone? When do you think you're going to get one?
2 years.
Why? Because there's nobody selling them and there's nowhere to use it. Why don't you keep that in the back of your mind? So do you think the 5G rollout is some giant Maui-like wave, or is it more like a ripple in a pond? How fast are we transitioning to 5G? Well, let's give you some clues to potentially answer this question. So first, there's a war, trade war, going on between the US and China, And two of the players on this market for 5G are Huawei on one side, and then you have the other companies like Nokia and Ericsson on the other side. And they are caught up in this trade battle. Okay? And by the way, between the trade battle, the market uncertainties, the tariffs, and everything else, that can't be speeding up the adoption of all these technologies when you throw all the political mess that's going in here. So that's one of the things that's slowing it down. Number two, who is Nokia, Huawei, and others? Who are they actually selling to? In Bloomberg, SPLC, supply chain, something you should have learned as part of your certification. And this shows you on the right who are the customers of the company, on the left who are the suppliers of the company. So as we think about buyer and buyer power, this will give us some insight into who those buyers are. This is a B2B marketplace. So my screen's a little compressed, just because of the nature of this projector we're on. But basically, Nokia's largest customer is AT&T. They represent 6.25% of Nokia's total sales last year. And Nokia represents 7% of AT&T's total CapEx spending last year. So they're both kind of important to each other. The second biggest customer is Verizon. They are 5% of Verizon's business. 4.5% of their revenue comes from Sprint. 3.3% from Telefonica, 3% Deutsche Telekom, 3% China Mobile, 2.5% Vodafone, 2.5% T-Mobile, Orange, etc. Okay, so you start looking through their customers. Their customers are the big cell phone operators and telcos around the world. That's who they're selling to. Okay, so let's go back to the top of this list. And we'll start with AT&T. And once we go to AT&T, we'll go back to RV. And then what I'm going to do is go to custom. And I'm going to look at spreads. But instead of just looking at North American, I am going to go, we'll go best fit, analyst curated. Actually, let's go GICS, which is the Global Industry Classification Service, and global. So is this an attractive market the carriers have? Yes. But ROIC overall, not as much. And more importantly, some of the big carriers isn't all that attractive. So here's the point. What's happening to the spread of these telcos over the next few years? And I'll just talk about your own personal experience. Anybody seen what your cell phone rates are these days? They're going down. And there's pricing wars because they're giving you unlimited plans, ever cheaper, and they're starting to subsidize the phones again. Well, this is not the time when you want to spend tens of billions of dollars on the next gen network, which is going to basically hurt your performance even more as you're in the middle of a pricing war with your current generation network that consumers aren't saying is awful. By the way, the next generation 5G technology will require 3 times as many cell towers to provide that super high speed service. So if you don't live in a city, good luck thinking you're going to get 5G anytime soon. And to be in a city, they have to convince the city to give them the extra cell phone towers. And the signals for true 5G don't penetrate walls and buildings that well. And essentially, they have to put the towers so close together that they're now competing with Wi-Fi. That the new Wi-Fi standard, cranked up to enterprise level, has about the same range as 5G signals. So when we think about substitutes, this is one of the challenges that 5G is running into, is that the substitutes are causing pause because the players are starting to say, do we really want to ramp up 5G, or can we do some kind of hybrid network that runs voice over IP through the cloud versus your telephone signal, right? And they're still figuring that out because the flip side is all these communities don't want to put up more cell phone towers And they're worried about the potential health benefits of all the radio frequencies that you're also starting to see pop up. So suddenly, these carriers aren't all that enthused about really speeding this out as fast as possible. So end result is that slow boat is impacting companies like Nokia. And I want to put this in the context of the historical analysis. They buy Alcatel-Lucent. They spend a huge amount of money in SG&A. What do you think that was for? Just to ramp up for all of the 5G revolution. Problem is, they're not seeing the 5G revolution come nearly as fast. And now, unlike the duopoly, when we looked at United Airlines, where there were two basically players selling everybody the planes in an expanding market, now you got a pie that's not really expanding, and you see global competition from sort of the top 5 companies that are all fighting for a market that's not growing very fast. And the market's rivalry is getting much more intense even before you throw politics into this. So what I'm saying is, if you look at the EEO, let's go back to Nokia, and the impact on the fact that they seem to lack competitive advantage because they don't have a positive spread relative to their peers, and I switch this to growth rates, for the next few years, 3 to 4% growth is all the markets are predicting for Nokia. So if they're selling the background infrastructure for cloud and 5G, and the analysts don't see more than about 3% growth in their business, this doesn't sound like radical adoption of new technologies at high prices, right? At best, if they're adopting, it's in competitive markets where they're having to some degree discount and fight it out to win those bids. And they're not winning them as fast as we would probably like to see as consumers, because the carriers aren't making all that money and they're still trying to monetize their previous 4G networks before they spend tens of billions of dollars to 5Gs that could drive their spreads negative. So I think that's the industry environment that Nokia is competing in. That's one scenario. We could actually start adopting different scenarios, but here's my point. The difference between Group Project 1, which you will do next week, and your previous homeworks is I no longer want you to just do a clinical assessment where you say, here's the number, it went up or down, and here's how much it changed. You have to do that. But now I want you to start connecting some dots. And I want you to start giving me some insight as to what's happening across the real world. And to some degree, we have some insight based on looking at 5 years of historical data. We have some insight because we have a forecast of what's going to happen to its financial performance over time. We have some insights as to why analysts like or don't like our industry under ANR. And if you read through the analyst reports, what they seem to like about Nokia more than anything else is not the top line growth, but the cost cuts that they're about to implement. Okay? So we also have the industry analysis that's summarized for us in BICO in terms of the company and the industry, which talks about all of this competition that I'm referring to and the challenges that these companies are having getting the carriers to adopt. We can work our way through SPLC to get more insight into who the buyers are. We talk about buyer power, and who the suppliers are. We talk about supplier power. So we're not just generically saying, here's 5 forces, suppliers up, buyers down, rivalry up, and just making generic statements. Because now we can tie it to actual analysis by the actual companies that we are investigating. So if you want to know what your next week's assignment's going to be, that's the difference. And this is what I'm going to expect for you to continue to get deeper on as we go through the semester. So we're going to continue talking about this on Wednesday. This was just kind of a simple example to illustrate where we want to go, where we look at historical and EIC. But nonetheless, we'll talk to everybody further during our next session. Okay, see everybody on Wednesday.